Hi, my name is Elliott Gue and I'm the editor of the Energy Strategist. Today is Wednesday, so I want to take a look at the oil inventory report that was released this morning at 10:30. What we were looking for was Business News survey was showing expectations for about a 1.5 million barrel build in crude oil inventories in the U.S. What we got was actually closer to 2.4 million barrels, so that was a little higher build than had been expected by the market, but not appreciably so. Especially when you consider that last week's decline of about 2.4 million barrels was a lot higher decline than had been expected. They had actually been looking for a build in inventories last week. So the net effect of this is that we're still a little bit under average for this time of year in terms of crude oil inventories in the U.S. As I've talked about in some of the webcasts over the last month or month and a half, earlier this year we actually had crude oil inventories that were above average, which would typically be, and we also had gasoline and distillate inventories. Well, gasoline inventories were above average, distillate inventories were just a little bit below average. Typically that type of an inventory picture would put downward pressure on crude oil prices. Of course, that hasn't really been the case at all this year. But I feel that a lot of the early strength we saw in crude up through early March or even into the latter part of March was mainly due to weakness in the U.S. dollar, not really anything in terms of fundamentally to do with the crude oil market. But what we're seeing now is actually a picture that's becoming a little bit more bullish. So crude oil inventories are back into the normal area for this time of year, and we're still seeing crude inch higher and actually starting to go up a lot faster than the U.S. dollar is going down. So we are actually seeing an improvement generally in the crude oil market from what was the case earlier this year. And one has to wonder, with the picture getting more bullish and the dollar still weak, what that could mean for crude oil prices. When the picture was not so bullish and the dollar was going down, crude oil prices were rising. Now they just look like likely to rise a lot faster. But looking specifically at gasoline, what we saw here was actually a very bullish number. We were looking for about a 2 million barrel decline in inventories, but what we actually got was more like 3.2. So that's a considerable larger drawdown in gasoline inventories than had been expected. Now, most of you will remember from looking at some of the posts I put up on the blog and various other, and on the Energy Strategist, etc. Gasoline inventories have been higher than average for most of this year. In fact, they've been above the upper end of the maximum range for the last 5 years. So they've been higher than they ever have been for this time of year, looking back over the last 5 years. Now that's one reason the refiners have been underperforming so much. Refiners make money on the spread between the price of crude oil, which represents a cost to them, and the price of gasoline and distillates like heating oil and diesel, which are the products that they sell. So if the price of crude oil goes up faster than the price of gasoline, you'll tend to see their margins get squeezed because their costs are higher and their product is priced lower. And that's exactly what we've been seeing this year, and that's why those stocks have been really underperforming. But now we're starting to see the very beginnings of a normalization in terms of the gasoline market. We're back to the sort of the upper end of the average range for this time of year, but a couple more bullish reports like this, and you can certainly see gasoline inventories drop back well into the average range or even to the below average range, theoretically, later on this season. What's really driving that is refinery utilization, which is a figure that is released as part of the same inventory report. People don't tend to pay as much attention to it as I believe they should. But if you look at the refinery utilization, which is simply you take the entire U.S. refining capacity and you express as a percentage how much of that capacity is actually being used to make gasoline and distillate. And what we find there is that we're sitting at around 85%, up from about 81% and change last week, but well under the average for this time of year. Typically at this time of year you would see refinery utilization in the upper 80s or even into the 90% range. What that tells us is that refiners are not producing as much gasoline or distillate as they normally would for this time of year, and the only reason for that is that their margins are so weak. So that's one reason why I think you might continue to see gasoline inventories drop from their current elevated levels and probably reach a more normalized level sort of towards the end of May, heading into the summer driving season, which of course is bullish for gasoline prices as well. So that's a little wrap-up of what we saw today from the crude oil inventory figure. Tomorrow morning we actually have the natural gas inventory data. For several months I've been saying that I thought that the natural gas market is a lot more interesting than the crude oil market from a fundamental point of view. I still actually believe that's the case, and it has certainly worked out, that trade. Natural gas prices have handily outperformed crude oil prices over the last 3 or 4 months, and most of those stocks have also greatly outperformed. What we're looking for tomorrow is a significant or smallish but significant build in natural gas inventories. That's actually normal for this time of year. We're in what we call sort of the shoulder season. In other words, the winter heating season is pretty much behind us for most of the major sections of the United States. Occasionally you might see a drawdown this time of year, but more typically you're going to see a build at this time of year, a small build. But we're not yet into that summer heating season when electric utilities tend to fire up their plants to produce more power so we can all run our air conditioners. So basically, we're sort of in an in-between season now. But right now, natural gas inventories are actually a little bit below average for this time of year. That's the first time that's been the case in more than 2 years. And you're seeing that expressed in a normalization and a really nice rally in any stocks remotely related to the North American natural gas market. So I think that'll be an interesting thing to look at. And we'll do another webcast tomorrow covering that number when we actually get it in more depth. Thank you very much.